Ladies and gentlemen, welcome back to the channel. Tesla stock at the time of recording this video is down on the day today. Now, we have a lot of news to get into specifically with Tesla. We're also going to take a look at the latest developments with the newish trade war with China and what some of your top trade representatives of the Trump administration said today. We're going to take a look again at some of the headlines from Jerome Powell, get you caught up to speed on everything you need to know with Tesla and the broader markets today. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video to come join the trading community. Come get involved with the action over there. We are going out finding these companies that Wall Street just hasn't figured out about yet in AI, software, energy, robotics, quantum, biopharma, and gene editing, some of your main themes for the next 10 plus years, and taking decisive investments in these high quality, smaller cap companies. This is how we're able to generate 200 plus year to date returns. So if you guys want to come join us, come identify these opportunities with us and invest in these potentially with us. Keep in mind, I'm not a financial advisor. This is not a recommendation. You could lose a lot of money. You could lose all your money. If you're a jackass, don't join that. I'm not a financial advisor, but that link is down below in the description of today's episode. But with that said, ladies and gentlemen, let's get into your Tesla stock breaking news. Elon Musk shares this. I don't think it's important at all, really. But he says logo complete, and it's macro hard on the top of XAI's factory. Elon Musk also calls Trump's Gaza peace deal a, quote, impressive accomplishment. Anything that, has to do with Elon Musk agreeing with Trump is a positive for Tesla stock. Now, Tesla is doing some paid advertising in the Melbourne, Australia airport to promote FSD, which recently launched in the country. Quote, some buttons start cars, others start the future. Tesla is offering a discount of up to $5,000 on its FSD supervised software to all eligible cars in Australia and New Zealand, just a month after rolling it out in Australia. On Tesla's Australia's inventory page, multiple in-stock cars with FSD supervised software now have a price adjustment of $4,940 for Model 3 and $3,450 Australian dollars for the Model Y, helping to bring the price of the car with FSD supervised down by that amount. And Tesla is now running paid ads on Paramount Plus, encouraging people to vote their Tesla shares ahead of the annual shareholder meeting on November 6th. Now, this quite possibly is the biggest news of the day today. NVIDIA CEO Jensen Huang hand-delivered the world's smallest AI supercomputer, a petaflop of performance in a box that fits on a desk, to Elon Musk today. Quote unquote, DGX Sparks Pack, 128 gigabytes of unified memory, and is powerful enough to run models with 200 billion parameters locally. This shows just how, close seemingly their at least professional relationship. General Motors said today they would take a $1.6 billion charge in Q3 as they reshape their electric vehicle strategy following the scrapping of a key federal incentive that is likely to dampen demand. Tesla is advertising in Australia via a sponsored article on Car Expert that pitches fleet electrification to small and medium businesses. Now, this is interesting because what a lot of people have said, specifically for the Model 3 standard and the Model Y standard, where you don't need all those bells and whistles, that's really like a fleet car. That's more for businesses, right? Like, that's a car that would make more sense for, car rental places, right? To buy and operate and to own, right? Maybe Uber drivers, right? For a more business setting, that is the vehicle that makes the most sense. Now, here on the day today, in institutional option activity, you have 58 different trades totaling $22.3 million with a positive order value of 58%. So it's a really low dollar amount today. but a little bit more positive than negative, so that looks good. Here on the day today as well, you have 90,000 shares that are being sold short. You have 496.9 thousand shares that are being borrowed, and return shares of 407.3 thousand. That means you have 76.72 million shares that are estimated currently sold short, with a short interest of free float at 2.73%, and that is a dollar amount sold short of $33.22 billion. Now, unfortunately, whatever happens next for Tesla largely has to do with the broader markets, right? To a certain extent. You could have all the good news in the world for Tesla, but if the markets are crashing because of shit happening with trade between the US and China, it's not going to matter all too much for Tesla stock. Now, I will say, there is a lot of upcoming catalysts for Tesla. Shareholder meeting November 6th. Elon's compensation package being approved. Tesla investing in XAI. I believe Q4 delivery numbers are going to be a lot better than Wall Street is currently expecting. I think everyone's thinking there's going to be this huge fall off in demand for Tesla. And I don't buy that for Q4. And we'll talk about exactly why that is over the coming weeks. But long story short, Q4 is probably going to be better than expected. Robotaxi has been awfully quiet recently. I think we could be gearing up to launch in another city or two by the end of this year. That's going to be, those are going to be the big catalysts that move Tesla. It's not going to be delivery numbers anymore. It's going to be Tesla launching Robotaxi in new cities, right? I think we probably get an update to Optimus and better outlined, kind of plans for 2026 specifically. We are expecting Optimus to launch in a commercial setting at some point next year, like not necessarily mass production, but a couple thousand Optimus bots potentially in a factory-like setting. That's what we are expecting next year. Those are the things that are really going to move Tesla. But between now and year end, I see a handful of positive catalysts on the horizon, and I don't really see any downside or negative catalyst thus far. But again, what happens with China and the US and trade, that is going to be a critical factor of what decides where Tesla goes into the end of this year. Tesla could be a $200 stock, $250 stock if trade goes wrong with China, if things do not damper down. Or Tesla could be a $600 stock if things go right between the US and China on trade. That's a good segue to lead into your broader market headlines today. What Powell said, what the Trump administration says about tariffs on November 1st. So let's get into that. So we have a lot of exciting headlines from Jerome Powell, but I think what is a little bit more pressing is actually relations between the U.S. and China. So we'll start with some of those headlines first. Here we have U.S. Trade Representative Greer says Xi and Trump are still set to meet. There's a scheduled time. So they still plan on meeting each other. And that's part of maybe why markets bounced back today. Obviously, Powell had some things to say and that contributed to that, but headlines like this sound good. Greer says that he wants to make sure markets respond to appropriate info. Greer says we always watch the stock and bond markets. Greer says we have export controls we can impose if we need to. Greer says 100% US tariffs on China could come sooner, depending on what China does next. Here you can see Greer says November 1st tariffs depend on what China does. Greer says Chinese realize they overstepped. Greer says it's hard for China to find an off-ramp on rare earths. Greer says that China's rare earth measures came out of nowhere. And Greer says China's rare earths measure is disproportionate. U.S. Trade Representative Greer says U.S. and China had staff-level talks in Washington on Monday. And U.S. Trade Representative Greer says we have had constructive talks with China over the past 6 months. So I think the fact that the US and China are even talking to each other is something that the markets like to hear. Now, today, Trump named Kevin Hassett, Kevin Warsh, and Christopher Waller as top contenders to replace Jerome Powell in 2026. Treasury Secretary Scott Bessent later added Michelle Bowman and Rick Reeder. Hassett, a close Trump ally, is seen as the front-runner for his pro-growth, low-rate stance, though some question his independence. And according to betting markets, Kevin Hassett is seen as, again, the likely runner-up at 41%, Kevin Warsh at 16%, and Christopher Waller at 15%. Citi's CEO says growth is cooling somewhat across the U.S. economy. JP Morgan CEO Jamie Dimon said today as well that the economy is on solid footing, quote-unquote, but could still weaken further. And after earnings today, Goldman Sachs is reportedly planning a round of layoffs. Now, good news is bank earnings across the board today came in stronger than expected. Here you can see JP Morgan says economy solid but downturn possible. JP Morgan's CFO Jeremy Barnum says the economy is currently stable with strong consumer spending and a resilient credit environment. However, growth is slowing and the labor market shows signs of softening. Quote, "It's easy to imagine the labor market deteriorating," he warns. Things being fine now doesn't guarantee they'll stay that way. So those are the biggest headlines that do not have to do with Powell. Now let's get into what Jerome Powell said today in his speech, because unlike last week's speech, Jerome Powell actually said some things that moved markets today. Jerome Powell says that tariffs increasing price pressure and downside risks to the U.S. job market have increased. Powell says right now there is no quote-unquote risk-free path for monetary policy. Powell says the outlook hasn't changed much since September's Fed meeting. So that's a really good thing for the markets to hear, because you know, it basically means what Powell said in September, like nothing has changed. Now, we haven't gotten economic data. We are going to be getting the CPI report next week, but the 100% tariff threat with China hasn't changed Powell's approach to monetary policy. That sounds good. Fed Chair Powell says data prior to U.S. government shutdown indicated growth might exceed expectations. Powell says available data shows tariffs increasing price pressures. Powell says current Fed policy toolkit is working very well. This is really positive as well. Fed Powell says, quote, "may be approaching the end of balance sheet contraction in the coming months." So that means less of a selling pressure in the bond market, which that means, less support keeping rates higher. So it basically means that rates could be coming down as maybe the Fed stops selling assets onto the market. So basically what happens is the Fed has a bunch of assets on their balance sheet that expire, like 5-year bonds, 3-year bonds, 7-year bonds, 10-year bonds, whatever the number is. Well, what happens is part of the function the Fed has used over the past, call it since the global financial crisis, to keep rates low is buy bonds on the open market. Because bond yields, long-term yields, are really a function of market demand, not Fed policy. So if the Fed has wanted rates to be low for 20 years, they've accumulated these assets on their balance sheet, as you can see here. Well, as they expire, they allow some of them to run off. So imagine in any given month, let's say for simple math's sake, 50 billion worth of 10-year bonds expire and would run off the balance sheet. Well, the Fed has been controlling that. So if 50 billion run off, the Fed might go out and purchase 25 billion so that only 25 billion expire and run off the balance sheet, right? That is buying pressure and selling pressure into the open market. Well, bond yields have an inverse correlation. So more buyers of bonds mean lower rates, right? Because it's like a dividend stock. If you bought a 5% yielding dividend stock at $100 and the stock goes to $200, well, new buyers at $200 are now at a 2.5% yield. Okay. if they're buying a stock at $200. Same thing is true in the bond market. So selling pressure in the bond market, as the Fed has been selling bonds into the marketplace, well, what does that do? That helps to keep rates higher, okay? Well, you could see how this could be very bullish for markets. And actually, the Fed's balance sheet tends to correlate to asset prices, right? As the balance sheet grows, asset prices tend to grow. As, the Fed's balance sheet falls, historically, asset prices tend to reflect that, okay? Well, the balance sheet has been falling since about 2022. And if that is about over with, then again, that's going to be less selling of assets into the marketplace, which should help actually rates fall on the long end of the curve. And Powell says that Fed officials will be discussing balance sheet composition. So what they own, what the duration is that they own, and what to keep, what to not keep in the coming months. Now, Fed Powell says the U.S. Central Bank has other data beyond government sources to use. So they're basically saying we're not in a complete blackout, that the Fed has some metrics to evaluate the economy and the labor market and what they should do as far as policy. And Powell says based on what they're seeing, nothing has really changed since September. That's a good thing to hear, that it doesn't look like we are plummeting into a recession, because that was the risk, right? If the government shut down for 3 months, a lot of pain could come in 3 months from an economic perspective, from a labor market perspective. If we're completely in the dark, then boom, 3 months later, we're surprised by that. Powell says there's things that they can look at to get a picture of, how the economy is going. Powell again reiterates that recent data indicates a low hire, low fire employment landscape. Powell says labor demand is moving a little faster than supply. Powell says we'll not try to pinpoint break-even rate of employment. Standard error itself is perhaps 50,000 per month. Powell says data since the July meeting shows labor market has softened considerably. Powell says as risks come more into balance, policy needed to move to being more neutral. Powell says labor market shows pretty significant downside risks. Powell says research points to longer lags for policy to influence jobs and inflation. So yeah, you can see that after Powell's statements and comments and questions he's answering, Tesla stock has actually recovered quite a bit. And, this is a welcome development. But what is really going to move this market are headlines on trade between the U.S. and China. Things seem to be going in the right direction, but this situation is not over with yet. And we need to still be prepared for anything to happen. We need to be prepared in our portfolios for the markets to crash. We need to be prepared for there to be a lot of up and down volatility. We need to be prepared for stocks to skyrocket higher. It's a very interesting market that we are in, to say the least, but you have to have flexibility and optionality in this market environment to come out a winner no matter what happens. You want to really set yourself up to win regardless. The best way to do that is to leg into stocks on these red days. Like today, I actually bought a brand new stock in the trading community, right? It was a red day to start off the day. You had to buy something. Okay, that's just how it is. But you got to have cash ready to buy as stocks, potentially fall further. You have to stay long this market. Bulls make money. Bears sound smart. Okay. But yeah, at this stage, this is not like a margin level, right? Stocks are still up a bit. If things get worse, you're going to fall even more. So you still want to be careful with any kind of margin in this market environment because of that downside risk. So let me know your thoughts on all of this down below in the comment section, ladies and gentlemen. That is going to do it for this video. Check that link out down below in the description of this video as well. If you guys want to come join the trading community, come see the stocks that we are buying, the AI stocks, again, energy, gene editing, biopharma, quantum, software, robotics. These are main themes for the next 10 years that I don't think are going away anytime soon. And you almost have to invest in these areas. And that is what we are executing on. So have a great rest of your day nonetheless, and I will see you in the next one.